Well, good morning and welcome to Business Morning. It's still the interest rate setting trading week right here in Lagos, Nigeria. And the markets are watching closely. Investors, lenders, and corporates alike are positioning ahead of policy signals that could shape liquidity, borrowing costs, and capital flows in the month ahead. But first off, let's get a check on what's playing out with the markets that we track now. We see the oil market is largely steady in early Asian trade. Today, Brent still holding up, $70.96 a barrel, 0.16% up, and we see WTI crude 65.50 up 0.12%. Investors are looking out for fresh talks today, a development that could shape near-term supply expectations. Still U.S.-Iran negotiations at this point. I hope traders don't get exhausted waiting for outcome from these negotiations there, but we're seeing the market still acting up there, $70.96. Let's see if $70 holds for Brent going forward. Meanwhile, Nigeria State Oil Company, NNPCL Limited, is set to begin exporting a new light sweet crude grade called Cawthorne in March, aiming to boost production and strengthen the country's position in global oil markets. Joining me now to explore how this will affect the market is Dumebi Oluwole, Manager, Financial Derivatives Company. Great to have you, Dumebi.
Great to be here, Ladi. Thank you very much for having me.
Fantastic. So we have another grade now, still sweet and light. What impact could the launch of the new Cawthorne crude, this grade, what do you think it will have on Nigeria's overall, oil production, especially with export volumes?
Yeah, I think what this would likely do is, of course, support our oil production volume, and more importantly, support our export earnings, right? If our export earnings increase because of the demand for this particular grade of crude oil, because ideally the idea is that by the time we do this, right, we will definitely increase our oil export volume, oil production export volume, and when this increases, our revenue from oil would likely increase, and that means that there's more foreign exchange, simply because there is demand for this type of crude because of how light it is to refine and get other byproducts of get other petroleum byproducts, right? If our export earnings increase, it means that there is more forex available that would likely support reserve accretion. And we've seen external reserves increase significantly, now almost about $50 billion. And if with this, would likely see more support to reserves. With reserves also rising, there is more capacity with the central bank to defend the naira or support the currency. And it also means there's more forex within the ecosystem to keep the naira stable.
And how by this new export grade, how would that affect Nigeria's standing and negotiating power within the OPEC Plus framework?
I mean, there are two sides to this, right? So the first one is the fact that OPEC in itself is trying to manage crude oil supply, right? And Nigeria is a follower in the cartel. You think about it like there are leaders in the cartel and then there are followers. Nigeria is a price follower in the cartel. And we've seen scenarios where, countries are producing above their OPEC quota. Nigeria, at least for the better half of 2025, met up with its OPEC quota. The likelihood of this coming up on board is that our crude oil production level, would likely increase, maybe even surpassing, the OPEC quota that we now have for just crude oil. And so there might be conversations that would need to be had, right, between Nigeria and the cartel as to how this would impact Nigeria's OPEC quota, ensuring that Nigeria is able to export more. The flip side of it is where we might have a situation like what happened with Angola, and Angola decided to opt out of the cartel. That is an extreme situation for Nigeria right now when you look at all the other factors being considered. But of course, it's not something to draw out of the table.
And I'm guessing, the similarity between, Cawthorne crude and, Bonny Light, I guess that's significant for Nigeria's appeal to international buyers.
Very much so, very much so. This new crude this new crude
Great.
output is very much like the crude grade is very much like the Bonny Light, and what this means is that the demand for this kind of crude would likely, remain strong. In fact, it just simply would, serve the international community a lot more, because the demand for Bonny Light is very strong, and knowing that there's even a lighter grade or something or a grade that's very close to Bonny Light would definitely entice the international community and of course support demand. And that's why initially I mentioned that would likely see this support export revenue from the oil sector, and more importantly, we see foreign reserves and general foreign exchange inflows coming into the country, improve.
So what challenges could Nigeria face in, sustaining increased oil output, despite introducing new grades like, Cawthorne? Definitely we still have, challenges there when it comes to meeting our quota.
Yes, I will say that the legacy issues, right, with Nigeria's crude oil production would definitely remain here in this case. A complete eradication of the theft, vandalism, will go a long way to ensuring that the expected benefits from the export of this particular crude grade is actualized and materialized. The core thing here to mention, I think I hinted at it earlier, is an extreme case where we are doing fantastic with this. Nigeria wants to export more crude oil. We're producing as much, and then a situation where OPEC is obviously trying to be more conservative with supply, and there are more negotiations that have to happen with the cartel where Nigeria might have to opt out. That's an extreme situation, like I mentioned, but that's also a risk to factor in, because that in itself has implications for Nigeria's standing in the international community. I think the other risk of this conversation or this new development is Nigeria's attention to the transitional fuel, which is natural gas, and how that there is still demand for that, and there is the risk that this new crude grade coming out, the attention from government authorities to on natural gas might reduce, so to say, and the expected efforts and push that one would, want the government to take with natural gas production and exports, knowing fully well that the world is transitioning, and of course there's still that very strong demand and appetite for renewable energy, or clean energy sources rather. There's that risk that the government might not necessarily, focus a lot more on natural gas, because this, of course, increases the appetite for Nigeria's fossil fuel resources.
All right, let's pivot to the FX market now. We did get, the first cut of 2026 from the NPC. That's the first cut this year. But we see the Naira gained in the parallel market, regardless, of this rate cut. Help us understand the dynamics there.
So the first thing is to state that markets ideally expected a rate cut, marginal rate cut actually, and a very cautious one at that, which was not too far-fetched when the MPC gave its decision. Reason being that the fundamentals are pointing to this marginal decline in the interest rate or the MPR, and so the market movement within the official market or parallel market was not so significant, reason being that it was already expected that this would be the case. So it was pretty much the norm going on. Trading went on as expected, and that's why we're still seeing the appreciation in the parallel market rate despite this rate cut. I think more importantly is to focus on the fundamentals right now that are driving this appreciation in the Naira. And for instance, we've seen support from the central bank to meet, quick demand in the FX market. We've also seen the supply to BDCs remain strong. We've also seen that the demand and supply factors are also improving. So while demand remains strong for import activities, school fee payments, and the likes, we're also seeing that FX supply is still strong when we look at the improvement in FPI inflows, remittance inflows, non-oil export earnings, and even oil export earnings, and all of that combined together is supporting reserves and of course supporting the naira stability. I think the key thing to now even focus more on is if this appreciation trend is likely to continue, and the answer to that question is very much likely. The expectation is that the appreciation level would likely slow down as we go into, the better half of the year, when you consider the peak of campaign activities or election activities, springing up. But primarily, we do expect that the stability and where the naira is currently trading at will continue.
All right, and definitely investors, they like to read between the lines. When monetary policy meetings, happen, and when there's a rate cut or a hold, it's always about forward guidance, for some investors at this time. Are you getting any clues into the easing cycle in 2026? Do you think we'll get more cuts this year?
There is a likelihood of that, but I think the entire tone of the central bank is what's more important for investors right now. We do already know that they will remain very orthodox. The central bank will also remain very cautious in how quickly it will reduce interest rates. And the reason for this is that there have been a lot of changes with the methodology of our inflation calculation. And the numbers that we're seeing now, while they somewhat represent the reality, right, of the fact that food prices are easing, petrol prices have remained stable, and in some cases, in some states have even declined, there's still the fact that there are structural issues that are very much present and would likely impact these factors even more so, especially the core inflation sub-index. And so the central bank is very watchful on how quickly it would cut rates. And I think that entire tone and forward guidance approach and signaling to investors has become more paramount in how investors move and make their decisions, and especially even for business owners. The language right now is that we're, of course, in a different regime. The central bank will do whatever it takes to ensure that prices remain stable. And more importantly, investors are happy to constantly bring their funds into the Nigerian economy. And I think that's right now is somewhat sufficient for investors.
Right. And, talking about investors, it's quite interesting. The day of the NPC meeting and when we got the cut, the NGX, closed in the red that day, and the day after the decision is still red. Are you seeing any relationship there?
It's a very interesting dynamic because ideally one would expect that with interest rates, falling, right, the stock market will, appreciate even more because of the inverse relationship between interest rates and stock prices. But that's not happening, and I just think it's just initial market jitters. And besides, I think there's some profit-taking activities also going on in the stock market as of now. But that is expected to taper off, especially with the fact that the market is expecting new listing, especially from the Dangote refinery. So there is a somewhat bullish run expected for the NGX. I think one other thing to mention is that the NGX has performed relatively very strong between 2025 and 2024 and 2025. We've seen over 50% gain, and that's expected to continue. The caveat here is that when a market, and it's not only peculiar to the stock market, when a market has such a sharp gain, in a short period of time, that sharp gain is likely to slow down. And I think we would likely see that behavior in the stock market, not because it's not going to gain, but just because it might not gain as much as it gained in 2025. And I think that's what the market is starting to price in. I think one other thing to mention is the fact that we've seen bellwether stocks, especially within the financial services, really carry the weight of the NGX. And certain reports have come out on the fact that not all banks have been able to, meet the new recapitalization benchmarks, and that, of course, slightly impacted the view on financial services stocks, and of course, it also impacted the broader stock market sentiment. But I think that will taper off as we go into the coming weeks, and of course, second half of the year.
Yeah, I guess investors can't complain. At this point, they've gained so much already.
Yes.
Than this year to date, so far. Thank you so much, Dunvi Oluwole. Thanks for helping us unpack what's playing out with these markets and the new grade. Thank you.
Yeah, thank you for having me.
All right, now talking about the market. Yeah, it did close in red yesterday, extending profit-taking trend. Yeah, as the NGX All Share Index was a marginal drop there, just about 6 basis points. Equity cap still standing at 124.75. Trillion naira there. So if you look at other parts, the activity was volume 1.37 billion traded, valued at 46.19 billion naira. Deal 70,222. That's for yesterday. Then we see top trades there. Zenith Bank Financial Services, Japan Gold again getting attention. 114.77 million units traded. So we see earnings are out. The latest one. Nestle Nigeria PLC's returned to positive equity after reporting strong revenue growth and a rebound there to profitability in its latest results. The company posted a 1.2 trillion naira in sales and a 105 billion naira profit, reversing last year's loss and moving from a negative equity to a positive position. Improved operational efficiency and stronger export performance supported the rebound, even as the broader market remains challenging. Investors are now watching whether this recovery signals, sustained momentum in Nigeria's consumer goods sector. So that's the latest one right there from Nestle Nigeria. I will still be expecting more earnings from other companies at this time. All right, to other news now. Nigerian Export-Import Bank says it's distributed 108 billion naira to exporters in 2025 as part of efforts to strengthen made-in-Nigeria goods and global competitiveness. Officials highlighted low-interest funding and initiatives like the Ceiling Project to ease trade logistics. Meanwhile, Nigeria's Sovereign Investment Authority and Ministry of Finance Incorporated emphasize diversified financing and mortgage investment as part of strategies to support infrastructure and economic growth. And to commodities now, President Bola Tinubu has extended the raw shea nut export ban by 1 year to deepen domestic processing and value addition. The policy aims to strengthen industrial growth and boost earnings from higher value products like shea butter, while channeling exports through the Nigerian Commodity Exchange framework. The government says the move supports community livelihoods and value chain development, with the Federal Ministry of Finance opening funding mechanisms to boost production and processing. We see telecommunications alone contributed 4.4 trillion naira, about 9.1% to the real GDP in Q3 2025, accounting for 84.5% of ICT sector output. Stakeholders expect stronger economic momentum on the back of festive spending, with overall growth projected at 4.22% and further expansion in 2026 as businesses deepen digital operations and productivity. Take a listen.
And the digital economy is increasingly critical to Nigeria's wider economy, and we heard a bit of that from the Honourable Minister just now. Affordable, reliable connectivity is essential infrastructure. In its very simplest form, we use it every day when we make a POS payment. Some of us do that in the most expensive restaurants, but many people do that with market traders on the side of the street. And it is amazing how that technology works. Innovation in this sector really matters. The UK's own experience shows that open and competitive telecoms markets, supported by clear and forward-looking regulation, help expand access, improve service quality, and particularly drives innovation.
Apart from our oil, telecommunication is the fastest growing, because see, you remember those days when we were young, you go to the bank, you have to drop a tally number and come back half later. But today, on your phone, you can transfer as much as 100 million naira. So it clearly shows. And what are you going to use? They're going to use your phone. Apart from the laptop, how many people carry laptop? You can't be carrying laptop around. You have your phone. I can tell you that telecoms is one of the fastest growing economy all over the world, not only in Nigeria, because it's very key. You must communicate with people, and if you don't communicate, how will the people hear from you? So nobody will not, any business will use telecoms platform.
And now our discussion focuses on a sharp 54% drop in foreign investment into manufacturing in Nigeria, raising questions about investor confidence and structural challenges in the industrial sector. We examined the causes of the decline and what it means for manufacturing growth, job creation, and economic diversification, moving forward. Joining me now for this conversation, we have Oluwatobi Ajayi. He's the CEO of Nord Automobiles Limited, joining me right here in the studio. It's great to have you, sir. Good morning.
Good morning. Thank you for having me.
Yeah, man, I call you Otumba today.
Yes.
Yeah. So, we know we love to check out what the data is saying, and the latest one, we're seeing the inflows, foreign inflows into the manufacturing sector. If you can put that up for me. Foreign inflows, that's slowed to about 54.11%. That's foreign investment coming into manufacturing and production. It's a big drop. That's for 9 months into 2025. How would you say this has impacted your industry? Did you feel, this drop?
Yeah. So I read it. I read the report. I think I don't know. Recently, I read it that foreign direct investment, first of all, increased in Nigeria, almost doubled.
Yes, that increased. Yeah.
The total foreign direct investment into Nigeria almost doubled. However, for the manufacturing sector, it dropped by, I think, 54.11%.
Right.
That's what I read. So I'm not surprised to see it, and it shows one thing. It means that foreign investors are coming into Nigeria. They believe in the country. They're bringing in money. However, they're not choosing manufacturing. They're not choosing factories. They're probably going for shorter term portfolios, maybe stocks, bond, retail, trade, and not going into the real hard part of making things work in a country, which I would say is the factories, the manufacturing sector, which
that's the part that creates
jobs. Which is the part that creates jobs, which we as Nigerians, as citizens of Nigerians and residents of Nigeria, we have to look at it in a very critical way and ask ourselves certain questions. Why do we have a system or an economy where people can come in, make money quickly and move out, but they do not want to stay in for the long term? They don't want to stay in the factories to create jobs, to make things easier and better. Because the truth of the matter is that when you have more factories, over time, not immediately, over time, the cost of the goods will drop. People will earn better. People will be able to, pay for things better, And at the end of the day, the economy is going to grow a lot faster. So we need to ask ourselves some important questions. Maybe when you continue, I can say a couple of things more.
Right.
We need to ask ourselves certain questions on why we're not doing that. We need to create a system where people, or policies, where people can have more incentives in making things in Nigeria. And one very key factor of that is not even, people talk about power and this. No.
Well, power is not an issue anymore.
It is an issue, actually.
Right.
However, it is moved into what I'll call, how many big businesses do you hear and say, I'm not moving because it's bad? No, you can go into gas. You can do a lot of things. People have, Nigerians are tough. Nigerian businessmen are tough businessmen. So we found a way to solve this problem. Most of the issues most factories have is that the Nigerian market is not for them. I always tell the people this. allow Africa, not only, it's not a Nigerian problem, it's an African problem, I think. Africans don't own the African market. Yes. We are in Africa, the market is, but the market is for those outside. So you can see even Nigerian entrepreneurs who have factories, after a while, even start to produce outside Nigeria, then import it in for many reasons, which I don't think we have time to go into here.
Right, but I guess it's the same old issues at this point. And looking at it from a local investor view at this point, seeing that the foreign inflows have dropped this much, I'm trying to imagine how that's impacted the auto sector. We know cars are really expensive in Nigeria right now, especially most of those imported brands. So is that trickling into the auto sector?
Yeah, so for the auto sector, last year, for example, was very good for the local auto industry. I would say we grew a bit. Most people in the auto sector had a increase in revenue and also increase in market share. So there are many reasons why there may be a drop in investment into the manufacturing sector. You have to understand that the manufacturing sector is a long-term investment space. So it's very possible. For example, in Nord, where we make vehicles, in 2014, we invested billions of naira, like multi-millions of USD, into buying machines and machineries. Of course, we're not going to do the same thing next year. So we used to say we're no more investing. We're investing, but we invested. And when you buy machines, the machines can last 15 years, 20 years, 25 years. So for us, for me, for Nord, for example, the reason why we didn't invest as much last year is because we did in 2024, sorry. So we might do again now. So, so that's one of the reasons. So it could be that that's the reason, that a lot of the investments have been done and people are just waiting to start to utilize these machines. It could also be, like people are talking about it, that we need to create a better environment for manufacturing firms to thrive, which I think is also one of the problems. So, but for the auto sector, it was a very good year for us. A lot of the blue chips moved from the popular Japanese brands and started buying made in Nigerian brands, not only for Nord, even other players in the market. So it was a very good year for us, and we think it should go better. However, we didn't grow as fast as we should. Do you understand? Which is some of the problems we're facing. Normally, maybe we grew probably like Nord, we probably grew, well, very good, let's say ×2. But when you look at the entire market, the Nigerian auto industry is a 4 trillion naira market. Do you understand? So you should see us growing maybe 200% every year. Do you understand? So
with Nigerians having to pay more to import vehicles, are they turning now to the local producers?
Yes, they are. They are. Especially the companies on the Nigerian Stock Exchange. I don't want to mention their name, but the biggest companies on the Nigerian Stock Exchange are now almost entirely going to made in Nigeria vehicles. Yes, because it makes better sense. The vehicles, at least for Nord, for example, the vehicles are affordable, they are reliable. It's as good as buying the vehicles in Japan. But this time around, you're buying it for half the price. So it makes sense. It can do the job, it's elegant, and it's going for half the price. So it makes perfect sense for them. The total cost of ownership is a lot lower. You have elegant vehicles, it can do the job. And the business people can see it on their books and they make their decision. So for us, it's been a good year. Not only for Nord, like I said earlier, for the entire auto industry. Most of my friends in the auto industry, my competitors even, we had a boom in 2025.
Right.
And it started already this year. Even this quarter, most people in the first 2 months already, for example, we've done what we did in the first 2 months and what we did last year in 6 months. And last year was a very good year. So you can imagine what it is now. And I think, like I said, it's not only for Nord. I think it's the entire
so you
industry.
guys are smiling to the bank.
Yeah, because we can afford more affordable vehicles. I think that's why.
Okay, so looking at most of 2025, the naira was stable.
Yes, very good.
Gain. And
yes.
Now we're sub.
Yeah, we're in 1.3. Sub 1.4. Yes.
Yes, at this time. How much of that is helping?
It's amazing. That's one of the reasons why. So right now you can offer credit facilities to entities, both personal and corporate, that you trust. you know that it will be stable. So you can say, okay, you know what, come and take this vehicle, pay over this period of time, 12 months, 6 months, depending on how much you trust them. It's easier. But when this Naira was not stable, it's not about whether how high or how low. What is important is stability. Know that when I sell this thing to you for 30 million Naira, it's 30 million Naira for at least a year. So when you don't pay me and you pay over time, I don't lose money. We don't lose money because of the exchange rate devaluation or fluctuation.
Right.
So that's very important for us. Yes,
right.
It's been good.
Stability, and also we saw, with the macros, inflation also trending downward.
Yes.
Most of the
Yeah,
year.
but that's a bit still. I think for consumer credit, for example, I think that's still very high. I understand what the CBN and the Ministry of Finance, or those responsible for managing the macroeconomic, side of the government are doing, but it's still very high. Most people, especially that are doing commercial business, are not going to borrow money at about 30%. It's not.
And we got the first rate cut of 2026.
Yeah,
This week.
it's a way.
26.5%.
Yes, we're not yet there yet, but it's a good way to start. It's a good way to start.
It's a good way to start.
Yes,
but
yes.
Okay, looking at credit affordability, seeing the body language, of the central bank at this point, are you optimistic that in 2026 credit will get cheaper?
Yeah, I think so. And you have to understand, and you have to, credit the central government for what they've done. We were in a very bad place in 2023. Everybody who understands, who saw what was happening and saw the numbers, were worried for Nigeria because it could have gone really bad. They managed it well, not only in terms of what they did in the numbers, also the posture. The CBN governor, Mr. Kaduso, had this no-nonsense attitude and the rest, which just shows that it's not about what you do too, it's how you look when you're doing it. When I look at him, he looks like a man who knows what he's doing. So he brought confidence to the sector. People were willing to invest in Nigeria more. Those that were already in Nigeria did not want to take their money out because they knew that it was going to be good. And it's been good. For example, in the stock market has been going up. In the auto industry, for example, the investments have been paying up. People are buying. So it's been okay, and we have to understand why the only other downside was that interest rates being high. But you cannot eat your cake and have it. We're coming from a very bad place, I would say, where they said there was too much Naira in the system. And of course we don't make a lot. That's what I'm talking about. We have to start manufacturing things in Nigeria. We have to start buying made in Nigeria things. If we're buying made in Nigeria items, like made in Nigeria vehicles, made in Nigeria things, the fact that we have too much money in the economy we know it will be because you won't have to chase dollars. The reason why it was a problem for CBN was that amount of money had to chase FX, which they had to use to import things into Nigeria. If it was remaining in Nigeria in the manufacturing space, it would have been easily managed. So they had to take the interest rate up to mop up as much money as they can and bring this, all this FX push under control. And I think they've done it. So I see a situation where they will start to ease up easily, so that we don't undo all the gains. We made a lot of gain. If they don't manage it properly, we can just go back to what it was. So, so we have to take it one step at a time. And hopefully we'll get to a point where the rate becomes what it was maybe in 2018, 2019, where it was.
So let's do it small.
Yeah, slowly. Slow and steady wins the race.
Slow and steady. All right, definitely we know investors are always trying to make an investment decision. Some of them are sitting on cash, at this point. Looking at your industry now, what investment opportunities are you seeing there that you feel investors should actually key into?
You want me to tell them?
Yes, tell them.
Okay.
I'm sure there's a lot of space, in your industry.
Well, there are a lot, but I want to take them, so I don't want to say it.
Right.
I want to take some of it, so I don't want to tell them. They should find out themselves.
But just give us some clues.
The component manufacturing, it's a very important space where people need to look into. Automobile, to make vehicles, right, you need different parts of the vehicles. So the plastic parts, for example, most people do not. We make some of them ourselves in Nigeria, but it's not enough. We have to import a lot of it still. So if somebody has what it takes, they can go into that space and make some of it. So, and some other parts of cars, which I'm not going to go into now. But going forward, maybe I'll come back here to announce it. We are actually backwardly integrating into some other aspects of the parts that you use in making cars, and I'm going to announce some of them as we go forward. Because we have to make as much as we use in Nigeria. You cannot have a population of 200 million people and you are import dependent. It cannot be.
Right, and I'm sure at some point we'll be able to compete in the electric vehicle space.
Yeah, we are. We already assembling electric vehicles in Nigeria under the name Tave. It's one of our subsidiaries, and it's doing very well. Sterling Bank is a big buyer of our vehicles. A lot of customers from Sterling Bank buy. So yeah, it's good.
All right, we'll keep tracking that space because Nigerians want to be able to afford cars. At this point, and not drive cars of 15 years and 20 years.
Well, the way to actually ensure that we don't drive too many old cars is to buy cars that are made in Nigeria, like is done in South Africa. You buy cars that are made here. In 4 years, 5 years, if you buy in volume like they do there, in 4 and 5 years, those cars will have to be renewed. So those cars go into a made in Nigeria second-hand market. So over time, maybe 10 years, you won't have to be importing even second-hand vehicles anymore. You are going to have a complete ecosystem of vehicles that are made in Nigeria from the beginning to the end. So you buy the vehicles in Nigeria here, brand new, use it for 5 years, you bring it to Nord, you trade it in, Nord sells it to the used car market. The guy in the used car market buys it, he continues, as his life improves, he can buy a new car, he comes to Nord. All the money remains in Nigeria, very few of it goes out and puts us under
we need more money staying in the country, especially that FX. Thank you so much, Oluwatobi Ajayi, CEO,
Thank you very much.
Nord Automobiles Limited.
Thank you very much. I appreciate it.
All right, we'll take a break now. When we come back, we look at Nigeria finally, getting some really nice data there when it comes to food inflation, entering single digits. We'll discuss that next. So stay with us. News on the cost of living front in Nigeria. We see data from the MBS shows food inflation has fallen to its lowest level in 14 years, with prices of staples like yams, eggs, and palm oil easing significantly in January. This drop could offer some much-needed relief to households after years of high food costs. Today, we'll discuss what this means for consumers, producers, and the economy ahead. Joining me now is David Eze-Onyekwere, a founder, Cheap Market Deal. Joining me right here in the studio. It's great to have you. Good morning.
Thank you for having me on the show.
Yeah. So when I look at the U.S. consumers, we see the U.S. Fed really close to their inflation target. That's been on the downward trend so far. But the PCE came in hotter than expected. That means personal consumption expenditure did go up. And we see they complain a lot about affordability. And looking at Nigeria, we see the data pointing downward. Headline inflation, food inflation, entering single-digit territory. But there still is an affordability issue with the average consumer in Nigeria. Help us reconcile all of this.
So if you look at Nigeria, so let me start by saying thank you for having me on the show. It's quite grateful that we have events like this that are maybe narrowing towards, let's say, the agricultural sector. So if you look at the price of food in Nigeria, I will tell you from a personal experience that yes, the price of food dropped significantly, but you see the affordability issue is still a problem in terms of families, because if you look at the minimum wage and the percentage of the price of food that is dropping, it's dropping, but it's not dropping to what it was pre-2019, pre-2023. You understand? So it's still an issue of affordability, because even if it's dropping, people cannot still afford it conveniently. A situation where the minimum wage is 70,000 naira and a bag of beans is selling for 40,000 naira, you see that someone is over 50% of their income to buy a bag of beans, or you see a bag of rice is for like 50,000 and 60,000, and that's about 80% of their income in terms of purchasing just basic two staples. So that's why you can't say it's even a sustainable trend. And then you look at the price of food dropping, you will now ask yourself, what is making this price of food drop? Is it that it's naturally dropping, or there are some unorthodox, permit me to use that word, that measures that the government is taking that is probably agitating one part of the production sector and just offering temporary relief to the consumers? And so is it sustainable in the long term, and is it much something that can be replicated from not just this administration or something repeatedly overboard? And so the answer is no. And so that's just so
what's keeping food prices unaffordable?
So if you look at why food prices dropped basically because the borders were open. You understand? The government gave a 150-day waiver for importers to import basic staples of food. And so that model that was done, it's not sustainable in the long run. I give you this for an example. The previous administration invested a lot of money in rice sector. Let's take that for an example. And let's say we have the Fadamatri refund project and so a lot of CBN intervention programs that were done. When I got to the grassroots farmer, it's a conversation for another day. Let's even start from there first. And then you've seen a lot of people, I know guys that have invested billions of naira in rice factories across Kano, Kebbi, Zamfara, and the rest of it. And then all of a sudden, you are opening the border. So you're not protecting your production, your producers. So you see that now they are now competing with the guys that are importing. And you know what happens? So a lot of factories are being shut down. You see, like even some guys that produce ethanol, a lot of their factories are shut down. So you see, that's why I said it's not.
But food prices stayed high when the borders were shut.
So that's also addicted. That can also be attributed to another factor. And so that factor will now look at security. So if you're looking at the price of food, there are several factors that are contributing to why food prices are rising. It's like a hydra. If you solve this problem, there is another problem that's coming. So we look at, if you're talking about realistically what really made food prices, so there are two major factors that really made food prices to go up in Nigeria. Aside from customer behavior and the exchange rate and the rest of it, we have the issue of insecurity. We have the issue of insecurity. Then we have the issue of insecurity is one. We have the issue of fluctuation in global supply chain. Now, the first problem started with the fertilizer problem. Nigeria, in the agri system in Nigeria, 60% to 70% of what we use is imported. I'm talking from fertilizer, we're talking from seeds, we're talking to agri input. Machineries, China, Germany. We are talking of fertilizer. We get that from Russia, Ukraine, because they produce 20% of. So what we have here are basically fertilizer blending plants that blend fertilizer components. Then if you're talking about drip tips and those seeds, we are from Holland, France. Most of these company players in this industry are foreigners. So when the Russian-Ukraine war started, what happened? A lot of things were disrupted, the fertilizer angle. Now, if you're not talking about the security angle, we now look at the point of farmers could no longer go to farm. We had local governments that farmers were paying, allegedly, as for what we read in the news, paying monies before they go to their farms. And so what happens? So if I'm a farmer, let's say I pay, for example, just because let's say I pay 20,000 naira to harvest one bag of corn, or let's say 2,000 naira to harvest one bag of corn, just for example. That cost, who do you think absorbs it? You are the consumer, will pass on that cost to you. And so when fertilizer goes up and the rest of it, so these are problems that really caused why food prices went up in Nigeria. Then we have the problem of infrastructure. Aside recently that this present administration is trying to fix a lot of transport system and the rest of it, we all know that a lot of infrastructural deficits happened that made cost of transporting this food become hard.
Right.
And so many other costs. Then we now finally, the major problem we have is lack of research in the agri industry. If you look at so many, thank God you started with the US, you see a lot of private sector fund agri research. How many companies in Nigeria fund research on a commercial scale in Nigeria? So these are the problems that make, so you have people still telling you use glyphosate, for example, as anti-herbicide. You know glyphosate has been banned. So you see they have 90-80 data using to solve a 2026 problem. It doesn't work out well.
Right.
So these are the
So we need to get our research straight, at this point to, help, solve most of these problems. I mean, Nigerians can be able to afford food again. Yeah, I missed that. Thank you so much. David Eze Onyekwe is the founder of Cheap Market Deal. Thank you for coming on today.
Thank you very much for having me on board.
All right, so now let's find out what's happening in the global economy. All right, now we have Ini John Mekwa with the details. Ini, great to have you. What's happening in the global economy?
A lot happening, Laddie, and I see you have been having fun talking about food and all. Nice one there, Laddie. And of course, you have the auto vehicle also. That obviously is something that's really great. But we'll start from what's going on connected to the United States, as you would guess. Iranian Foreign Minister Abbas Araghchi has met with his Omani counterpart in Geneva, Switzerland. That's ahead of a new round of indirect nuclear negotiations with the United States. We know we've been talking about that talk. Well, the meeting reviewed Iran's position on the lifting of sanctions and nuclear issues. This is according to the state news agency. During the meeting, Iran conveyed to the Omani side key elements under consideration for a potential agreement on nuclear issues and sanctions relief. Earlier, IRNA says that the minister arrived in the Swiss city leading a diplomatic delegation to attend Thursday's nuclear talks. He's accompanied by a high-level delegation that includes Deputy Foreign Minister for Political Affairs, as well as a team of nuclear and legal experts, and the Deputy Foreign Minister for Legal and International Affairs, who's currently in Switzerland, and addressed the Geneva Disarmament Forum on Monday, will also join. And of course, we know that all of this is heading towards a peace between Iran and the United States, with, of course, the threat of military action on Iran also in the picture. Now, U.S. tariffs, they've rerouted trade or not dented it as much as feared, allowing larger than expected economic growth in certain developing markets. This is according to European Bank for Reconstruction and Development. That's the EBRD. Growth in the 40 countries covered by the Development Finance Institution went up by a larger than forecast 3.4%. But the bank is warning that continued trade turmoil could yet derail growth in some of the economies. Slowing inflation and big spending on infrastructure projects, particularly in Europe, were helping, but the report also shows that the impact of U.S. President Donald Trump's tariff were not as stark as expected. Should that be good news? Well, the bank now expects 3.6% growth this year and 3.7% in 2027, both at 0.5 percentage points upward revision compared with its autumn projections. Exports from some EBRD countries to the United States even grew, particularly those related to AI boom, as those countries replace China's exports. UK Foreign Secretary Yvette Cooper will announce a critical minerals deal with Kazakhstan on Thursday as the West scrambles to diversify its supply chains away from China. Britain's top diplomat will host foreign ministers from the 5 Central Asian countries, Kazakhstan, Kyrgyzstan, Tajikistan, I think all the scans, at the Lancaster House in London, and Ms. Cooper will unveil the critical minerals deal with Kazakhstan Foreign Minister alongside pacts with other countries covering carbon capture and higher education. And still in the UK, starting from yesterday, visitors from 85 countries must obtain an electronic travel authorization before traveling to the United Kingdom. The UK Interior Minister, under the ETA scheme, which was introduced in 2023, shows that travelers who do not require visa must apply online for a pre-travel permit costing about £16. And before we head to the markets now, let's start with what happened in the market in the United States yesterday. Our correspondent in Washington, Maria Bird, captured the closing day hours and sent in this report.
The U.S. stock market closed in an upward swing on Wednesday as the Dow Jones was up at 0.63%, the S&P 500 was up at 0.81%, and the heavy tech Nasdaq led the way at 1.26% up. Most of this was due to the fact that there's much anticipation that there will be an upward swing in a positive earnings reports after the ringing of the bell on Wednesday, as companies like Nvidia show positive signs in the AI, and Salesforce also showing some strong signs and strong reports. As many investors continue to watch the tech industry and hopeful that AI continues to have a strong impact on the U.S. stock market.
More from the markets now. Nvidia has reported its fiscal fourth quarter results after the bell on Wednesday, beating analysts' expectation on the top and bottom lines. The company also offered Q1 guidance between $76.44 billion and $79.56 billion, and that's above Wall Street's estimate of $72.8 billion. That outlook doesn't include any potential revenue out of China. Nvidia shares rose as much as 3% in after-hours trade before giving up those gains yesterday. Apple Incorporated is in discussions with key Indian banks and global card networks, and that's in preparation to start Apple Pay in the world's most populous country. The iPhone maker is in talks with ICICI Bank Limited, as well as others like HDFC and Axis Bank Limited, and their aim is to introduce payment service in India around the middle of this year, according to market players. And the timeline remains fluid according to the talks, but it indicates that it's approaching launch. South Korea's central bank has kept its policy rate unchanged today for a sixth consecutive meeting and increased its growth and inflation projections for this year. The Bank of Korea maintained its benchmark 7-day purchase rate at 2.50%. 25 analysts who surveyed the story by World Bank Street had anticipated the decision. And policymakers last reduced rates in May last year. Strong demand for Korean chip exports has since decreased the economy's requirement for support. The central bank is also concerned that lower rates could weaken the won and increase the risk of excessive household debt. Most analysts expect the bank to maintain rates steady this year, with some projecting possible increases in 2027.
All right, thank you, Uni, for the details there. But let's look at the last trading week of February. Let's see how it's moving on. On the NGX, we're slightly in positive territory, about 0.19%. Stock getting attention right now: Jai's Bank, Unilever Nigeria, Zenith Bank, Lafarge Africa, and Mutual Benefits Assurance. On the global front now, we see Europe. That's the index is there in the green. Right now, Asia closed mostly in the green. Today, then we see U.S. futures marginally positive. The metals market, gold, we're seeing a big pullback right there with gold, and Bitcoin also having a pullback after a monster run yesterday. But we'll bring all of these updates for you at 1:30 on Business Incorporated. Thank you for watching Business Morning. I'm Ladi Williams from me and the team right here at Channels HQ. It's bye for now.